You know, we're all feeling the pinch of inflation when it comes to everyday items.
I think what we're seeing here is that Amazon's not well built for inflation.
More now on Australia's cost of living crisis, with inflation soaring to a 21-year high.
In fact, fighting skyrocketing inflation numbers.
So, why is everybody upset about the economy? It's this number, 7.9%.
Look, I think the perils are visible for all to see, which is that inflation is far above the Fed's 2% target. The market expects inflation to remain high for decades to come.
I used to have savings. I don't have it anymore.
Well, there's two ways of dealing with debt. You pay it back in hard money or you pay it back in soft money. You pay it back in hard money, you have a depression. So throughout history, eventually, that was abandoned and you print money. That was what 71 was. That was what March 1933 was.
I am so afraid of a democracy getting the idea that you can just print money to solve all problems.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we, as a central bank, we have the ability to create money digitally, buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply.
March 2020, the COVID-19 pandemic began. From the beginning of the pandemic to January, the U.S. money supply has increased $5.8 trillion, reaching a total of $21.8 trillion, meaning roughly 27% of U.S. dollar has been printed since the pandemic. Inflation. It's something we hear a lot in the news today. What is it? Why do we fear it? Why is it harmful? To answer what inflation is, we must understand the history of money.
The strength of a nation's currency is based on the strength of that nation's economy.
So we, as a central bank, we have the ability to create money.
Inflation is a very serious subject. You can argue it's the way democracies die.
We're seeing very substantial inflation. It's very interesting.
To suspend temporarily the convertibility of the dollar into gold.
I know the families all across America are hurting because of inflation.
What is money? Money is a medium of exchange for goods. Somewhere along the human evolutionary path, we realized that in order for you to sell me eggs and me to sell you milk, it would be easier to trade using gold coins as a medium of exchange. That's not to say that gold's the only money that's been used, or even the first. Gold is what is known as commodity money. Commodities like sugar, salt, wheat, gold, or even shells are commodities that have been used as money throughout history. For roughly 5,000 years, humanity has used gold as a medium, and gold has worked for a really long time. But why did we turn away from gold? Let's talk about how paper money began to answer that question. The Chinese Empire were the first to adopt paper money. Merchants from the empire were paid in notes representing gold. Say the government needed 50 blades and 25 tons of grain for war efforts. Well, since gold is heavy and risky to carry around, they would give these merchants paper representing an IOU, which they could take to the capital and receive their gold coin for. Well, merchants realized that they could also trade these pieces of paper as a medium of exchange. They were essentially trading government debts. The government soon caught on, and so paper money was born. Later, an Italian low-crime family, the Medici, rose to power and moved up the social ladder. A family history of popes and having a crucial role in politics. Well, how did they do this? The Medici understood that moving gold is annoying when paying for products across the vast distance. Gold isn't safe to carry, and it requires security to keep it safe, and that can come for a fee. So instead, the Medici wrote pieces of paper, IOUs representing gold, just like the Chinese did, but with a small tweak. The merchant now takes this note to a local bank and exchanges the note for 97 coins, but one down the road may take them for 99 coins. So you go to the one offering 99, of course. The local banks have set a deal with the Medici and can now go bring these IOUs to the Medici in exchange for 100 gold coins, making the local banks a small profit. It wouldn't be long before everyone hopped into the paper money business. Goldsmiths, private banks, kings, queens, and governments began issuing their own paper notes. We have gold because we cannot trust governments. President Hoover, 1933. In the 1930s, things were not going well. The economic depression was sweeping the world, and the governments were forced to remove the gold standard. They printed more dollars so they could stimulate the economy and fix unemployment problems sweeping the nation. Shortly after, the world would feel the pains of World War II, and much of the world would be in collapse. Europe was in shambles and needed to rebuild. The world simply needed order and a plan. Most importantly, a stable currency. The Bretton Woods Conference was called into action where world politicians decided that all world currencies would peg their dollar to the dollar that would be set to $35 per ounce of gold. Therefore, the government could only print the amount of money equal to what they had in gold. The world order was changing from the British superiority to the Americans being the world superpower. The Bretton Woods system worked. Europe was able to rebuild. The American Second Industrial Revolution kicked off. But in 1971, the agreed-on rules of the Bretton Woods Conference were being challenged. America was printing more dollars than what they had gold in reserves, causing the international community to question America. Other countries in Europe could also no longer follow the Bretton Woods system. It was collapsing. France actually sent a warship to the US to get their gold. August 15th, 1971 would change the meaning of money forever. Nixon then announced the end of the gold standard.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
America was fighting a war in Vietnam they couldn't pay for in gold, so they got caught printing too much money instead. This money printing, with currency being backed by nothing, is what is known as fiat currency. This puts all trust in governments. Governments tell you that your dollars are valuable, but also have the power to devalue it. And well, since all currencies were pegged to the dollar, every currency in the world was no longer backed by gold. Humanity had used this for 5,000 years, and we suddenly abandon it. So if money is no longer represented of gold, then what is it? Well, Nixon said it. The strength of a nation's currency is based on the strength of that nation's economy. Well, what fuels America's economy? Oil. It's in everything. It fuels our vehicles, goes into our construction materials, powers our society, and even into our pharmaceuticals. But that's a video for another time. Like the video if you'd like to see more about oil and our dependence on it. But anyways, let's get back to the money. So why do we fear inflation? Inflation lowers the value of your dollars. This depreciation of currency lowers your purchasing power without you even seeing it happen. Since I'm Canadian, I'm going to be using the Consumer Price Index calculator from the Bank of Canada. Let's use $1,000 in 2017, my graduating year. If I had saved $1,000, then it lost 14.63% in value. And that's within only 5 years' time. Inflation is a way of punishing people for saving money and rewarding those who lend. People always told me growing up, you need to save your money, get some savings. Inflation bleeds the holders of your currency slowly. By increasing the supply, your savings get devalued. So what do we do with our money when an inflationary psychology is in play? We trust it with investment bankers, we have a 401k, and we download stock trading apps on your phone. Whatever it is you have to do to fight inflation. And with record inflation all over the globe, it seems as if the fiat system is ready for some higher hyperinflation. Places in South America have been suffering the effects of hyperinflation for some time now, and Europe and North America are beginning now to see the pains.
I know the families all across America are hurting because of inflation. There are two leading causes of inflation we're seeing today. The first cause of inflation is a once-in-a-century pandemic. And this year we have a second cause, Mr. Putin's war in Ukraine.
Now let's get into the nitty-gritty of how the monetary system works. We're going to use this example from Endeavor. I highly suggest you watch this video to understand more about money and the effects of the current monetary system that we are under. The link for that video will be in the description below. We'll use this example because I think it is one of the best.
Without a fixed link to gold, the U.S. Treasury has been able to borrow and spend as much money as it wanted. When the U.S. government needs money, it takes out a loan with the Federal Reserve. The Federal Reserve prints the currency required for the loan, and in return receives an IOU from the U.S. Treasury. These IOUs are called government bonds. With the money provided from these loans, or bonds, the U.S. government pays its bills and obligations. Meanwhile, the U.S. Treasury and the Federal Reserve work closely together to sell these bonds at auction, where foreign central banks, pension funds, and even individuals buy these U.S. government loans. And why wouldn't they? Loaning money to the U.S. government is virtually a risk-free investment. But if the loans are spent on bills and paying off previous loans, where does the government get the money to pay back the current loan and the interest that is charged on it? Is investing in a U.S. government bond simply one small part in a giant Ponzi scheme?
The Federal Reserve System is definitely a Ponzi scheme. There's no question about it. They go through the appearance of lending money to the governments, and the governments agree to pay back the money plus interest. And so this money comes into being. They create it just for that purpose. They give it to the governments. Didn't exist before that, you understand. Central banks just make it out of nothing and click a few keys on a keyboard of a computer, and the Treasury of the United States government now has another $1 trillion that it can spend. That's where that money came from. And so that creates a liability on the part of the federal government to pay it back, plus interest. Now think about that, plus interest. Well, when it comes time to pay it back, plus the interest, they can't pay it back, and they certainly can't pay it back plus interest too. So what they do is they borrow more to cover the original loan plus the interest, and then by that time Congress wants more money anyway. So the debt just keeps going up and up and up and up.
Under the current monetary system, we borrow all of our currency into existence, and we promise to pay it back plus interest. If you borrow the very first dollar into existence, and that's the only dollar that exists on the planet, but you promise to pay it back plus another dollar's worth of interest, where do you get the second dollar? The answer is you have to borrow that. It's a Ponzi scheme because you can never pay it off. It always requires that we go deeper into debt.
Since 1971, the United States has been running trade deficits with the rest of the world, meaning we've been buying a lot more products from the rest of the world than they have been buying from us. The Japanese and Koreans sell us cars and electronics. The Middle East sells us oil. And the Chinese sell us seemingly everything on our Walmart shelves. The U.S. pays for these products with U.S. dollars, and everyone is happy. But if countries were to convert these U.S. dollar profits back into their own currencies, their currencies would rise in value, making their economies less desirable to trade with. Instead, countries invest their dollar profits by buying U.S. government bonds. So countries around the world sell their goods to the U.S. in exchange for U.S. dollars, which have been borrowed through the Federal Reserve, creating IOUs. And countries then loan their U.S. dollar profits back to the U.S. by buying more IOUs. The money from these loans is spent on paying government expenses, as well as paying back previous IOUs. But in order to do this, larger and larger loans must be made in order to pay back the principal and the interest. By paying back old loans with new and larger loans, it would appear as if the entire world has been investing their hard-earned money into a Ponzi scheme of epic proportions.
It is hard to believe that the world monetary system that we use today operates this way, and there's no solution to the increasing debt crisis other than to go further into debt. Let's explain how the CPI model for tracking inflation is extremely flawed. The CPI model does not track a basket of goods. It tracks the most common goods that we choose to put in our basket. So let's sort of use an example from Seyfin Amos, author of the Fiat Standard. And let's say you work for $15 a day, and every day you eat a $10 delicious magical steak that gives your body all the nutrients it needs for the day, and that other $5 gets spent on things like gas and living. Well, let's say higher hyperinflation hits the economy and the government prints more money, devaluing your savings and raising prices around you. Your steak is now $25, but your wages only increased to $20. Well, what do? You have to settle for a lower end of beef or even soy for $12. Based on this, the CPI model only shows 2% inflation based on the ever-changing basket of goods we choose. Governments love to give us skewed numbers on inflation because they don't want us knowing it's an issue. Recently, inflation's become a hot topic in the world, and the COVID pandemic and now Putin's war in Ukraine, inflation is hitting the world. Many currencies have been devalued and inflated. The simple fact is your government doesn't want to have to raise taxes on people to pay for things. Instead, they just print money and use that money for what they want to spend it on. This allows governments to sort of tax their society without them even realizing it. So even if you're paying taxes, the federal government still wants to take your money via inflation, so you don't even see it happen. But this is worse to watch from neighboring countries to the US. When the US prints money, the Canadian government has to do the same thing to keep our peg close to the dollar and remain good trading partners.
You'll forgive me if I don't think about monetary policy.
Following the devastating collapse of 2008, a new invention would come around to make us question money for the first time. Under the pseudonym Satoshi Nakamoto, he released the Bitcoin white paper. Bitcoin, a peer-to-peer electronic cash system. What is Bitcoin? Well, it's actually easier to explain than the world monetary system. Bitcoin uses blockchain technology. Blockchain is a digital ledger. It's the entire history of transactions, and anyone can see the economic activity since the beginning. To hold Bitcoin, you need a wallet. Everyone on the network can see your public key and even know how much Bitcoin you have, but you're the only person with the access to the private key, meaning you're the only one that can send that Bitcoin somewhere else. Bitcoin allows transactions without the need of a financial institution or bank note. Bitcoin's decentralization is much different compared to the centralized nature of banking we have today. Take a simple bank e-transfer, for example. You send money to a friend, they have to accept the payment, and then the bank puts the money in their account, appearing to be instant. But in reality, at the end of the week, all the financial institutions have to decide how much money to send each other to update their ledgers. This system is sort of clunky, as you can see. Bitcoin, however, has a ledger that is always and instantly updated, and anyone can see the activity. And with Bitcoin, if you're sending money to somebody's address, they can't even deny that money coming to you. It's always instantly accepted into the wallet. Also, with Bitcoin, we remove the government's control over the supply of the currency. Unlike fiat currency, there's a max supply of Bitcoins. There will be 21 million Bitcoins, and the last Bitcoin will be mined in 2140. In the early days, Bitcoin was used to buy drugs on the Silk Road, but not anymore. Bitcoin and blockchain technology are becoming very mainstream. Every day, more and more news about interest in blockchain and Bitcoin comes out of governments around the world. The benefit of cryptocurrency is the ability to see all the economic data happening openly, transparent, and distributed freely. There is great evidence to support that this is the next evolution of money. Governments are looking on how they can use the blockchain in their own currency. These are called central bank digital currencies, CBDCs for short. This is governments' attempt at modernizing their currency to keep up with technology. Don't get it twisted though, this is still fiat money and most likely meaning they can print as much money as they want to. It's just a modernization of money. More than 80% of central banks are looking at CBDCs as the next evolution of money. From gold to paper to digital to blockchain, what's next? I'm not a decentralized utopian, but the solution it offers is very appealing as well. Even things like NFTs are proving to be extremely useful, but no, your metaverse monkey picture isn't going to revolutionize the world. However, they will be disruptive as solutions for things like digitalizing receipts, tracking products, digital ownership, and even in gaming. A real-world example is Alfa Romeo. The company is issuing a tokenized representation of your vehicle. With this NFT, it can store an insane amount of information, like when it was serviced, what was done, what the average speed of the vehicle is, the battery health. You get the picture. So as a used buyer, when you're looking at the vehicle, you can see how the previous owner took care of their vehicle. And that's an example of how we're using blockchain to solve problems. In the future of gaming, we can tokenize things like skins, DLC, and games. The owners can then sell that game back on the community marketplace later on, even selling in-game currency if applicable. Companies can then take a percentage fee on secondary sales. But thank you so much for watching today's video. Sadly, that's all the time we have for today. Please subscribe to my channel if you're interested in this sort of content, and stay tuned for my video on how Western oil companies are recording record profits while oil increases in value and prices go up around us.